Hey, it's Tom here and welcome back to the channel. In this video, I want to talk about investing outside of your home country. For me personally, I earn pretty much all of my income in New Zealand dollars. I earn New Zealand dollars in my day job. I earn New Zealand dollars from YouTube. I earn New Zealand dollars from some of the sponsors that I work with on this YouTube channel as well. And a pretty big chunk of my investment portfolio in the stock market is actually based outside of New Zealand. So I'm constantly having to go through this process of converting New Zealand dollars into either US dollars or Australian dollars typically. And when I do that, there is sort of another variable that can change my returns. So I'm not only influenced by whether the stock price goes up or down, but I'm also influenced by whether the exchange rates move against me or even help me out a little bit, just depending on how those currencies actually trade over time versus the New Zealand dollar. And tracking that impact on your returns through foreign exchange movements can actually be quite difficult to track. Personally, I use a tool called Sharesight to do that. I am, shameless plug, a Sharesight affiliate. I do have a link down in the description if you're interested in checking that out. There is a free version. There's also paid versions which have much better tax reporting in particular. But even the free version will give you basically your return in terms of how much you gain from just share price changes, how much you get from dividends, and then also how much you gain or lose from currency exchange rate sort of changes as well. And one of the interesting things that I see for my own portfolio over the past 12 months is I've had a pretty phenomenal year. I've had probably my best returns ever in these past 12 months. But when I look at my US portfolio, my returns are actually about 10% lower in New Zealand dollar terms than they look like on sort of the surface of things if I were to just simply look at share prices. And that's basically because the New Zealand dollar has gotten stronger against the US dollar, and my portfolio looks slightly lower as a result of that. So it does have a very real impact. If you're interested in checking out Sharesight, definitely head to the link down in the description below. If you purchase a paid subscription, using that link will actually get you 4 months free, and it's generally actually a tax deductible expense as well. Definitely check with your accountant in your own situation for that one. But for me personally, that is a tax deductible expense that I can sort of subtract off my income in order to pay a slightly lower overall tax on my annual income. So check out Sharesight if you're interested, but that is kind of how I track this. But it does have a very real impact on my returns as an international investor. So in this video, I want to focus on actually a couple of the things that one of my favorite investors, Mohnish Pabrai, said around this topic. Mohnish Pabrai is a US-based investor, but he also invests a lot internationally. He's got holdings not only in the US, but also in Turkey, in Japan, and in India is my understanding. He may have had holdings elsewhere as well, but certainly he does expose himself to some of these currency fluctuations, and it does have a very real impact on his returns as well. So Mohnish Pabrai has given an answer on how he sort of manages these exchange rate fluctuations in a couple of different talks, and I basically want to go through some of that logic here, as well as give an example with one of Mohnish Pabrai's Turkish investments of how that particular business has actually acted in a way where they can smooth out a lot of the bumps in the road for some international investors. So the answer that Mohnish Pabrai gave when he was asked about how he manages these exchange rate fluctuations was actually kind of boring, but it does at least give you a very simple framework to work with. And he basically said that if he is right on the underlying business, the exchange rate really is not meaningful. So Mohnish Pabrai is an investor that is typically looking for multi-bagger returns. He's not generally trying to buy something that he thinks is worth 100 and trying to buy it for 97. He's generally trying to buy stocks that are at very significant discounts to intrinsic value, or are at least at a modest discount to intrinsic value, but that value is sort of likely to grow very fast over time. So typically, he has relatively long holding periods for stocks. He's looking to make 20, 30+% returns per year if that particular investment does work out as he expects it to. Of course, we have mistakes built in and that sort of thing as well. But that's really his target return. And Mohnish Pabrai really has no special insights on what exchange rates are going to do in Turkey or in India or in Japan. And for that reason, he basically says, if he's right on the business and he captures like a 5x in 5 years on some particular investment, it's really not going to matter what the exchange rate did over that period of time. Even if it did move against him quite significantly, that is still going to work out as a phenomenal return. So he really doesn't let exchange rates and potential fluctuations in currencies influence his investments at all. Neither Mohnish Pabrai nor myself really have any special insights on foreign exchange. One thing I do know for certain is that over time the New Zealand dollar will get weaker. What I can buy for $1 today, I will certainly not be able to buy for $1 out into the future. That's just how inflation works and how traditionally currencies have worked. Over time, the purchasing power of an individual dollar will go down. Now, although I know that for absolutely certain, the thing I don't know for certain is whether the purchasing power of the New Zealand dollar will go down at a faster or a slower rate than the US dollar. The US dollar is also going to lose purchasing power over time due to inflation, just like every other currency around the world. But whether that's going to happen faster or slower than the New Zealand dollar or the Turkish lira or the Japanese yen is anybody's guess, in my opinion. But luckily for me, in my personal investing outside of New Zealand in both Australia and the US, the exchange rate with the New Zealand dollar versus the Australian dollar versus the US dollar has been relatively stable over time. I just mentioned that it's really cost me about a 10% return over the past year, but it fluctuates within a relatively normal band and has done over the last 20 or 30 years. Same kind of goes with the Australian dollar, although it fluctuates year to year. It's really behaved within a fairly tight band over a period of time. But there are currencies that have been kind of consistently getting devalued a lot faster than other currencies. And one of the strong examples of that I want to use in this video is the Turkish lira. This is a currency that Mohnish Pabrai had to convert some of his US dollars into in order to buy a company by the name of Sharesight Logistics. And since making that investment in Sharesight Logistics back in 2018 or 2019, I believe it was, the Turkish lira relative to the US dollar has gone down a lot. And that's kind of just a continuation of a trend that's been going on for a long period of time. But if we look at Mohnish Pabrai's actual return in that business, he's still coming out the other side very, very well. For a short period of time, Sharesight Logistics was a 10x for Mohnish Pabrai. It went up a lot. It's come back down slightly, but it's still something like about a 7x return in only a handful of years. And that big currency devaluation in Turkey was actually one of the reasons why Mohnish Pabrai was able to even make that investment in the first place. Over time, the Turkish lira has had massive currency devaluations, and that frankly has just scared a lot of international investors away, and it's made the Turkish stock market one of the cheapest stock markets in the world. A hunting ground where you're likely to be able to find fairly significant discounts to intrinsic value. And in the case of the particular real estate investment company that the warehousing REIT that Mohnish Pabrai bought, in this case Sharesight Logistics, he was able to buy it at a massive discount to the liquidation value of the real estate that business owned. But one of the interesting things that this particular Turkish business also did for Mohnish Pabrai was that they have actually shifted themselves away from a lot of that exchange rate risk that other investors would typically have in these companies. So Sharesight Logistics, for example, it's a warehousing REIT. They have several different customers paying them in all sorts of different currencies. And basically what that business has done over time is they've tried to shift a lot of their income sources into other currencies. They've moved a large proportion of their business from Turkish lira into actually euros. And if you look at the euro relative to the US dollar, it's actually a much more stable relationship. So although the Turkish lira has been devalued quite significantly and Mohnish Pabrai's shares are sort of mark to market in Turkish lira, the business has actually set themselves up in a way where they are actually much more able to keep up with that currency devaluation than many other Turkish businesses that earn all their income in one currency. They've been able to, in a lot of ways, detach themselves from that particular issue, and they've been able to shift to a much more stable currency in euros. The other thing that Mohnish Pabrai actually mentioned in one of his talks is that particular Turkish business frankly just owns great assets, and he really doesn't care whether those assets are valued in Turkish lira or euros or seashells. He even actually said in that particular talk that he was giving to some students, he knows that those assets have a value. Over time, they'll be able to produce cash flow from those assets, or maybe seashell flow from those assets if that ever becomes the currency of choice. The currency is really irrelevant to him. The power that those assets have to generate a return is really what is important to him as an investor. And whether he gets paid in X or Y or Z currency, over time he expects to do well out of that business because it's a high quality asset that he was able to buy at ridiculously cheap prices. So those are my personal thoughts on managing exchange rates as an international investor. Largely, I basically don't do anything. I know there's probably opinions on the other side of this discussion as well, where they like to hedge currencies and exchange rates and so on. Personally, I think my time is far better spent trying to figure out an individual business and make a good investment. If the investment works out as well as I hope it does when I go into it, then even if the currency moves against me, then I should still come out the other side of that investment okay. And that is actually exactly what I've seen in my personal portfolio this year. I hope that, in some years the exchange rate does work in my favor as well, and I have a bit of a double whammy. But nonetheless, if I can buy good businesses at reasonable prices, and I'm sort of constantly buying a currency that has a relatively steady relationship with the New Zealand dollar, I don't really pay too much attention to the fluctuations that happen on a daily or monthly or even annual basis. So that's it from me today. I do hope you enjoyed the video. If you did, please hit like and hit subscribe, and I will see you in the next one. Cheers.